The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 5th day of May. My pleasure to be here. Dow's up 52 at 17,704. S&P is up about 5 at 2,055. The comp index is up 8 at 47.34. The VIX index is at 15.78. It's under 16, but it's in the 15s, which says you're going to have a little bit of rally, a little bit of pullback, a little mixed market right there. Looking at gold. Gold was up quite sharply before. Now it's up 5 at 12.79. Silver's up 15 cents at 17.46. Platinum up 4 at 10.60. You've got high-grade copper down 3.3 at 2.15. Whoa, got to watch that closely. Crude oil had a bounce because of that big fire up in Canada, so it's at 44.96, up $1.18. Bonds are up 8/30 seconds at 164 and 20/30 seconds. What is really important about this whole move, we'll get into that in a moment. I have to mention that the dollar, which is showing tremendous strength, is up 54 cents right now, 93.73. That, in fact, is going to be my thinking was that the dollar. The Fed really wanted the dollar to be pulling back. They weren't all that interested in rates. Rates kind of take care of themselves, at least in this phase. We saw the dollar pull back really sharply, and I'll get into that in a moment. Let me just do this because the smorgasbord or the Rubik's Cube that we're going to look at has so many different moving parts that we're looking at inflection and deflection points all over the show this week. Very important. Last week was a really important week for the down move to get a sell signal to a sell mode in the down, the S&P, and the other indices. In the daily charts, we have to wait until tomorrow at Friday at 4 o'clock before we can tell whether or not we've got any kind of a sell signal in the weekly charts. The E-minis are up 2.75. Let me just do this. I actually did remember. Very good. So we've made a trough E in the 10-minute chart of the E-mini. We had gone to an unusual peak D. I wasn't trading this. If I was, I'm sure that I would have been stopped out a couple of times. And then I would have thought, great, that's a breakout there. That move that occurred at just after 4 o'clock this morning. If I was up at 4 o'clock this morning, I was up at 5:30, but not 4 o'clock. And then it made a high at that, and it pulled back sharper. Because it pulled back sharply, that made it a peak D. Now, what's really interesting about this particular move here is that now I can go into the different areas that I very much want to look at in this first segment. The chart that I focused on for my subscribers to my opening call, and we do remain short, quite heavily short for us, in the Dow and the multiples of the Dow short side. And we have taken profits in the commodity sector and the gold sector. It might be early because it was really a toss-up. I just said, let's get stopped out. I'm not going to get out on purpose. Let's get stopped out. We were stopped out. And the reason being that dollar index is going to be very important. But as we go to this Dow chart, look what happened. I keep repeating this. For those of you who have seen it before, I'm sorry, that's just the way it is. We have many new viewers all the time to TFNN. I need to go through this as if it's completely fresh. There's a certain series of peaks in the Chapman wave that are expected from the lowest, most identifiable low bar. And that says you can usually go to 4 higher peaks. At the 4th higher peak, peak D, I used to number it, but then I changed it to letters. The trademark actually and the copyright and registration all have both. But what's most important about it is that within the context of this, the peak F that was made, the 6th highest peak made at 18,351 in May the 19th, almost exactly a year ago. I love when we say almost exactly. It's either almost or it's exactly. But when it's really close, you say, almost exactly, at that peak F top on the 19th of May of 2015, the Dow went sideways with a very choppy action. And I discovered this recently. I've always used it, but I discovered it as a fantastic tool for this particular index at this particular time. And that is the 20-period exponential moving average. And look what happened. When the Dow broke that, it tried to get back. It made it as if it was a line to hug. And then it pulled back even sharper. So it made almost a one-to-one to the downside. And then, after going from 18,351 to 17,714, that's 700 point down, had a very sharp rally. And that rally took it above the 20-period exponential moving average, then below it for a lower low, and then above it for about over a week and a half, which would have said, hey, you could be making an arch formation. This could be a retest of the high. Up, all of a sudden, it plunged down. And then that declining red line, the 20-period exponential moving average, became the GPS for the way down. The GPS in the sense that it gave a directional move, but then also because it said every time you touch that red line, you might go a little higher, but you're going to be making lower lows and lower highs until that break of a downtrend line that was started on August the 12th, and then bam, on August the 20th, it went to those 3 huge days to the downside to the 15,370 level. Then on the 24th of August, it ran back up. And that 20-period exponential moving average suddenly became the propellant line instead of the repellent line. It became the propellant line. As a propellant line, it gets ignited every time it touches it, and whoosh, 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 until we went again to a peak F, the 6th highest peak in the Chapman wave methodology. On the 3rd of November, it's 17,977. Then it came down. It broke underneath the 20-period moving average. This time it held for much longer above, but while the moving average went higher, the price went lower. That's a very negative divergence. And then all of a sudden, kaplup, kaplup, pop, pop, kaplup, pop, pop. And all of a sudden, from the 31st of December, the very last day of December, that became an incredible repellent line. And the market plunged from 17,977 down to 17,000, was it 200? Yeah, 210 on November the 16th. Had all those rally failures back at the 18,180-ish area. And then, kaplop. It went down, made a trend line, and then when it broke that trend line decisively on the 6th of January, bam, 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 all the way down to 15,450 on the 20th of January, started a whopping move up into the 16,400s, pulled back, made a higher high, 15,503 on the 11th of February. And this saw what I call the H pattern, the lowercase h pattern that you saw there. It's a successful test of the left side low. And we spiraled up, and we had 2 buy modes, and the final one went to peak D. Peak D, this is how powerful these Ds are. And then an alternate count, which eventually landed at a peak D. We were short just about a day or so before the top, and we have been short. And the reason being that 20-period moving average looks to me like, in fact, it could become the propellant-repellent zone of importance. And I'll talk a lot more about it when we get back, because something's happening here that we've got to consider. A bounce is real close, and then we'll see what happens. I'll be back. Dow's up 35.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're back. Dow's up 46, S&P's up 4. Now, a couple of questions. Actually, I've had a few questions about this over the last 24 hours. Why would you be short if you're expecting a rally? And the reason I'm short is that we got short way up here, near the exact high. And we actually added right almost at the high. Therefore, the whippiness that I am anticipating is possible suggests there could be a rally. 17,805 in the Dow is the 20-period exponential moving average. It's 100 points higher. But it could even go a little higher than that, because that's exactly what happened here. Then it never went back to the old highs, but it got pretty close. So because we're in that position, it says to me, don't get shaken out until the market tells you to get shaken out, because there should be, I'm only saying should based on this particular pattern, there should be lower highs and lower lows until we're going to get to a point, probably a retest right here, and that retest will be, say, 17,580s, somewhere around there, 570s. And that's going to give me the next clue to say, aha, if we break that, then the next level of support is 70,484, the low of the 7th of April. But most importantly, how high we go says that we could chop around for almost all of May into early June before breaking down, if that's the pattern. Now, the big question is, for me anyway, are we going to make a new high this summer? That's an all-time high. Or are we going to fail and have to wait for a really decisive low to be made to start almost like a brand new buy mode? How on earth that could happen, I have no idea. So I'm dealing with this in the sense that patterns repeat over and over again. This is just a chart of human emotion. And look at the repetition of a certain emotion is very natural. That's what happens therefore in the stock market. This is just a price point of human emotion, right? And I'm looking at this and I'm saying, so far, the pattern is matched very well. And there's another thing. Let me go to this. The volatility index, the VIX index. As long as, wrong chart. Click VIX.X. As long as we're looking at the VIX index holding in the 15s, with a chance that Friday we could close above the 9-period exponential moving average in the weekly chart, which is at about 1560. And we're at 1576 right now. This is the volatility index. And as long as there's some kind of a pattern that says there is buying of insurance, and that buying of insurance usually coincides with selling pressure in the market. So I'm looking at this and I'm saying the MACD is very strong. Stochastic's not that strong. It's only 65%. I'd like it to be in the 80% or higher area. For the daily chart, the weekly chart is, there's nothing there. It's 9% in the stochastic. MACD hasn't even crossed positive. So let me get out of this here for the 120-minute chart. Oh, I need to show you something. I'll be back there. And the 120-minute chart is starting to make slightly higher lows, and that's important, but it's under the 1707 9-period moving average. So I'm trying to put this whole picture together. As I said, a smorgasbord. Now let me run this through quickly, and then I'll go to some of the questions that I've had. Let me just refresh while I'm doing this. Okay. And what we're looking at here is, I'm going to make this real easy. If the volatility index starts straight in the 16s, but especially the 17s over the next 3 days, you'll see triple-digit down moves. If, in fact, the volatility index starts to close under 15, it says buying pressure is returned. Just be very careful on the short side. But selectively, I think you absolutely could be short. There are a lot of stocks that are very vulnerable, right? Okay. TLT, the bond. So what I'm back to my 4 horsemen, VIXY, Bondy, Goldie, and Dolly. And that's going to be very important. The TLT is up 14 cents at 130.28. As long as there's buying pressure of the TLT, it says to me that within the context of my 4 horsemen, money's flowing out of equities into the so-called safety of bonds, number one. The TBT had a really strong move. It went to a peak B, but underneath the previous peak, what was that, E? Peak D high. So as long as it's under that high of 38.85, it's at 36.55 right now, it says that the buying of equities and the selling of bonds is not taking place. So that says to me that if the TBT fails, you should see the bond yields decline. If the TBT starts to go to at 36.55, if it pops a dollar from here between the next day or two, within the next day or two, that means the yields are starting to go up. Okay, so we've got bonds, that's Bondy. Let's go to Dolly, DXY. Dollar is at 93.80, up 62 cents. Whoa, a nice move up here. We've been trying to go long this. I'm not sure we actually got it. I was not following it as closely as I should. I was busy with other things, so I don't know. But in the meantime, back at the ranch, the weekly chart, and I need to talk about this for a moment. You remember what I said, the left side low of 92.62 made the week of the 24th of August of 2015. We haven't actually quite reached the 2016 August level yet. This is the candle that tested the low, broke the low. Therefore, the best case is that it can go to a previous peak or maybe a little higher a little higher. So the dollar says that if on Friday it closes above 92.62, that's a very positive thing. And it says 94.82 is the 9-period exponential moving average. That's where it should try to head to. If it does that, the next candle of importance will be right around about 96. That is huge. 91 just the other day. The low was 91.92. You're talking about 5%, 5-6% in just like a week and a half. Well, of course, it's dropped that many times. So this is going to be interesting. 91, what did I say? 92, I believe. Okay, so the dollar I like for the shorter term, but there's something that I have to talk about here. If, in fact, we're making this double U. Let me put that here in the chart formation. A U that goes to another U. A lowercase u, it's not as deep. Actually, this one is quite deep. But let's call it a double U pattern. That's like W, the letter W, made up of two U's together. Wow, can't believe it took me till just a couple of years to go to suddenly say, oh, W, double U. Sometimes I can be real slow. So here we are. If that pattern unfolds, we can see a test of the 95.66 level in the 9-period moving average quite quickly. If it's going to break, it shouldn't take more than a week from Friday, 10 days maximum, to break under the 91.92 low that was made this week. If it breaks under that, that says, you got to be real careful. Dollar could go all the way to the 200-period moving average of 88.17. So we've covered the dolly, we've covered the bondy, we've covered the VIXY, and the one thing that's missing right now is Goldie. I'll be right back. Basil Chapman, Dow's only up 23, S&P's up $1.50. Be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. So this is what I'm looking at here. We've discussed volatility, the VIX index, the volatility index I call VIXY. We've discussed bondy, the bonds through the TLT and the TBT. We've discussed the dolly, the dollar index, the V-shaped pattern that's forming right now, very important for this Friday or at the latest next Friday to close above 92.62. And now we're going to talk about gold. And gold has made a peak E. Now, what I discussed the other day, and one of the reasons why I said I am prepared to take profits in the gold positions, I might be early. I'd love to keep it as a longer term, but I don't see why I want to risk. The upside to me at this point looks limited. I don't see why I want to risk a nice, even a little bit of a profit. So I'm out. And the reason is, if you're looking at patterns, you'll see here's the channel line. I've drawn it nice and thick. I'm going to draw the green line. Now I'm going to make this, I'll make it green. New right here. I don't want it so long, but that's okay. So now what we've got is we've got an inside track, Chapman Wave inside track, which says gold at 12.77 up $3.40 could in fact pull back. And if it does pull back, it should pull back under the 9-period exponential moving average of 12.73, and then it should go into this inside track. How it holds the inside track support, which will be between, depends when it is because it's a rising trend line. Let's just say it's between 12.50, this is a continuous contract, and 12.30. All right? If it takes out 12.30, then I'm very comfortable saying, aha, this allows the dollar to move higher for another week or two, or even 3, or even the whole month of May, going into early June, as this index and the commodities in general start to digest huge gains. Don't tell me that going from, I don't usually like to put the price in here because it gets smoothed out, but let's say the low of the week of the 4th of December, which is at 1047 in this particular index, going all 1047, going all the way to the recent high just 4 or 5 days ago of 1306. Don't tell me it doesn't deserve some kind of a breather. And even the monthly could make a peak A, going all the way into June before July starts up again. So I'm prepared to say at this particular point, even though I'm really favoring the commodities as potentially having another big move later in the summer, I want to see what happens when they pull back. And that's the reason. So I'm giving you my thinking and the positions. And so that says to me, I'm wrong if gold goes not above 1306 because it's still in this channel. Remember we spoke about this channel? Look how long it goes all the way back. I'm going to squeeze this so that you can see exactly what I'm looking at. Look at that. It's a channel that basically I started from the high, let's see, of the 25th of August of 2015. So it starts an inside track and it keeps going. And every time the price gets to this area here, the Chapman Wave inside track repellent or resistance area, every time it does that, I'm saying to myself, is it going to reverse? And this time it did reverse again at a peak E. I haven't put the down arrow yet because the MACD hasn't turned negative. Stochastic has turned under 80%, and it hasn't closed underneath the 1272 9-period exponential moving average. When it does that, I might be able to put a down arrow. It's not that much to go, and it does it quite quickly sometimes, just in a matter of a few weeks. So that's my thinking. Now, I'm wrong, not if it goes into this track, because it could make a leg F and then turn down. But I'm wrong if gold trades at 1326. I guess another, 1326. So about another 40 points higher from here. And, gold can do that very quickly. It's done it before. So I'm just saying that's it. And then I have to rethink it, and I have to try to get back in on the next dip. Okay, I wanted to show you this. Mr. Bill and the Dan show this chart, and I'm just going to show you. In fact, I haven't even had a look to see. I haven't had a chance because it's got a black background. I haven't even seen what it is. But I just wanted to show you. You see these arrows? You see this up arrow? And it goes to peak A, B, C, D, and then it goes to an E. There's a down arrow, makes that cup formation, which is the Chapman Wave drop bucket, double top. If it takes out 1/3 to 1/2 from the lip, left side lip to the base of the cup, it's going to test the lows, and if it takes out the lows decisively, you can make a 1-to-1 to the downside, and then it could go 1-to-2, 1-to-3. And look what happened. It goes peak E, makes that double top with no new high, and then it pulls back and goes trough A, trough B, trough C, trough D, and that trough D is, I was going to click it as if my chart is a turnaround. He has an up arrow and it goes peak A, B, C, D, and yet another E with a down arrow. So now let me see what it is. This is in fact TF. Oh, is this the TF? Oh, I haven't even looked at the TF for a while. So let me just move this away here. Let's see if I can get the TF. I'll go at TF. And the TF is the mini Russell 2000. Oh, and there it is. The mini Russell 2000 had a slightly different picture in the daily. He wasn't looking at the daily. He was looking at a shorter term. It went to a peak F top. You see, this is the reason why I'm treating this very seriously, this pullback. Because at a peak F top in the different indices, usually you get something that takes you down to at least the last major support or trend line. So we're just touching the 200-period moving average. My thinking is that we could very well go down in the E-mini, which is at 1113 right now. It's the TF. This is the E-mini Russell 2000 continuous contract. It could test 1083 over the coming couple of weeks. We'll see. It's going to be a whippy ride. Okay. So I do thank you, Mr. Bull. I just wanted to show that a lot of people that I know are using the Chapman Wave methodology, and I just hope it helps you in your ability to trade and pick and turns in the market and to identify the tops. So let's do this. I'm going to go to the 4 things I wanted to do. Oh, I wanted, if you don't mind, I wanted to just do this GE. This is my 4 bellwether stocks. Actually, it's my 4 Dow index. And I only have 2 real bellwethers. The short term is GE, which said yesterday it was a horrible session. It made the 32.05 peak F top on the 31st of March, and it's been making H patterns ever since on the way down. And it said that the market might fail, and kind of that's what happened. So what we're looking at here in GE at 30.15, up 8 cents, unless GE is able to spiral back above 30.60, it's at 30.15. It doesn't sound like much, but for GE these days, there was never a problem in the last, since the low. In fact, it's been one of the leaders in the market, let alone the Dow, for a long time. Now it's making a potential peak F top in the weekly. So I'm watching this real closely. If you look at IBM, which is no bellwether, it's no nothing. In fact, it's an old dinosaur, but it's really doing some things in their own internal business. I know I've heard it from many people. I've spoken to people who are involved in it, and it's going to be time. But IBM is trying to position itself to be a leader, or at least up there amongst the leaders of its category, and it really has to do a lot with the cloud. Well, the cloud is a complicated thing, and it shows in the IBM chart. So IBM up 2.46 today, 146.71. It's just within a trading band. Peak A in the weekly, peak A in the monthly. If it doesn't make a new high, a recovery high this week. But look at the triple M. Whoops. Oh, I'll get to that when we come back. In the meantime, back to the ranch. I'll just go back to the E-mini. The E-mini is up 350 at 2050. Basil Chapman, I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, Basil Chapman. Yes, of course, you can go to the front page of TFN. You can test my opening call. Just a lot of charts. I've been a little slow in the charts over the last 2 days because we got our positions. I didn't want to overdo it. I didn't want to overthink this. And overthinking it, sometimes you can create problems. The USO has gone to a peak E. It's pulled back. And if it goes above 11.50, it's going to be leg F, maybe a new leg B, but in the meantime, it's holding well. But I do believe that even crude oil should have some kind of a pullback. Remember, we were looking for crude oil to bounce to that leg D if it was possible. Wow, we almost got that today. So maybe there's still that chance. Let's go to Tom in Plymouth, Massachusetts. Hi, Tom. How are you?
Hey, good morning, Basil. How are you?
I'm well, thank you.
That's good. Hey, I got in the dust the other day at 142, and I'm wondering about extending my position. What do you think about that?
This is really difficult for me. I spent a lot of time. I, too, was going to go. This dust, folks, is the Direction Daily Gold Miners 3 times. And this is the short side of gold, right? Yeah.
Yes.
And basically you think, oh, my God, at 1.42, this could go, I mean, it could go to 4, it could go to 5. But actually, my biggest concern is that some of these ETFs have now, I'm even concerned about one of them called the TVIX going down to the 3s. When they get to that position, it's real close for them to announce, we're going to make a 20-for-1 or 25-for-1 reverse split. And that kind of changes the whole scenario. So just be aware of that. Now, as a trade...
Did that too. Dust is going to do that on, I think it's May 18th.
Oh, they've already announced it. Okay, well, you've got time. That's fine. It's not that there's a problem. It's just that it's kind of fun to be buying something, put a lot of money, put a lot of shares into a low price thing without breaking the bank, but it's the same risk. That's all.
Right.
Right. So I'm going to suggest to you, I believe based on the dollar action, I believe based on my analysis of the gold, the GLD, the XAU, I really do think this is an opportunity for gold to take a breather. If it accelerates up from now, something else is going on. You don't even want to know about it because that would be, I'd be expecting the bank index to tank and everything. So I would like just a normal breathing, respiratory exhalation so that the deep breath that was taken, gold can take a little bit of a breather take a rest. It hit the 200-period moving average in the XAU this week. I think it can pull back. So I'm with you. I like this as a trade, not to say there isn't risk. And I don't know if you want to hold it over the weekend by thinking at 140, what did you say, 140 what?
142.
You see, you're up 20 cents. We know that this could move real quickly. I don't think it's going to move that quickly under these conditions to the downside. I like what it is. Are you able to put in a stop that will be triggered overnight, or can you only trade it during the day?
Yeah, I can only trade it during the day, but that's still okay. I'm willing to take that risk. And like you say, I don't know if I'd keep it over the weekend, depending on what happens tomorrow. A lot of time gold has its troubles on
Friday. Right. Although we used to see Friday was, instead of bad, Friday was spectacular at one point. Now I think it's calming down. I love your trade. I think you got in with a nice risk reward. The two things that I would say to you is, if tomorrow it's still holding above 151, preferably it's at 172, 175, you'd love that, I'm sure. Because if it doesn't make a new high today, that would, at 176, it starts leg B tomorrow. That would be really nice. It'll be the first leg B has had since back in March the 23rd. So I like the trade. I think it's you've got your eye on the prize here. The difficulty is that it gets eroded by the end of the day, and that's the only thing but as a price movement, I think you're incorrectly. I don't know how it'll be impacted at the close today. If, let's just say, it's stuck at 162 at 3:30, will it be 162 at 4:15? Or you know what I'm saying? That when they reconfigure it,
Yep.
that's the only thing. I think you're right. I would say to you, Tom, don't put a stop in so that you don't take a loss. That's just the only thing I can say. It's not worth taking a loss. And even give yourself a present of 2 cents just to say, hey, I covered my time, if not my price. But I think you're right. I think if correct, by Monday, the dollar should be, in fact, testing the upper, the 95s area, and gold should be pulling back about $20 to $30. Then you'll be looking good. That's my scenario. I hope I'm right. You hope I'm right.
Thank you much.
Thank you very much. Good luck. And I love Plymouth. I haven't been there for a long time. I really must go this summer. Thanks for calling, Tom. So, folks, let's just do this real quickly, VIX, because we're about to wrap up. You're going to go for your swimming lesson very soon. Oh, no, I did that in a rush. We've got another segment to come. All right, one more. Thank you, Al, just my engineer. Wonderful engineer, just reminded me I've got another segment. So I wouldn't have said anything else to Tom other than I would have said it slower. So let's do this, because I have one segment to come. I wanted to show you, I didn't finish. I went to IBM. I wanted to finish Triple M. I often do this. I talk about something, and then by the time we get to it in the next segment, I've moved on like to 6-7 charts ahead. So the Triple M has got a rectangle formation. It's real simple. Triple M breaks, it's at 167.76, up 60 cents. In this week coming, in the next 3 days, if Triple M breaks 170 to start trying to retest 170.77, the most recent all-time high, that's very positive. But if it starts to pull back and takes out the 166 level, it's going to quickly test 164.97, the low of the 26th of April. And that would confirm for me that the weekly chart needs at least another couple of weeks of consolidations. That is spectacular W formation. And I mean, it's done everything it has to, and it made its fractional new high, 170.50 to 170.77. Hey, that's just like the dollar. I got to watch this one real closely. Now let's look at the dollar chart, that UW formation. This is just made one U. Okay, now UTX is really my other bellwether. GE is my shorter term. UTX is more my intermediate term. And it's pulling back from the 107.07 recent peak E, Chapman wave top. That was on the 20th, I think. No, I'm sorry, the 27th. And it's pulled back to 100, so it's 7 points lower, 6.5 points lower. And it's saying to me, based on the daily chart, based on the MACD and stochastic, that it really wants to test the 98.80s, 200-period exponential moving average. And the weekly chart just needs a breather, and it should test somewhere into the 99s. It doesn't say it has to. I'm saying visually, I'm looking at it as if it's a chart formation that's telling me a story, and the story is telling me is that the daily is weak enough to test the 9884, which will, of course, will be testing the 9909, but it's sitting right now a fraction under the 9-period exponential moving average in the weekly chart. So this at 100.74, just up 7 cents. I'm going to watch this one real closely. Now, what's even more important about UTX is that if there is going to be a brand new buy mode, a buy signal to buy mode established in the monthly chart, the pullback that occurs, and this goes to the question that I've been asked about, if you are looking at higher highs to come, but on the short term you're looking for lower lows and lower highs, and yet the weekly charts are still acting really well, why would you not be just waiting instead of being kind of aggressively short? And the answer is, I decided that I'm going to go with what I'm seeing right now because that's the only thing that's going to impact the weekly charts. So I have to say that if we pull back sharply today at the close to maybe just, well, let me talk about that when we get back. I won't rush that thought. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
We get your swimming lessons, and of course, we've got, we've got swimming lessons at noon. 1 o'clock, you have Steve Rhodes. 2 o'clock, you have Dave White. 3 o'clock, you have Tom O'Brien. I'll be interviewed by Tom a little later on in that segment. And then Andy Hecht at 5. And Andy's got this fantastic program that's going on. 12 courses. I mean, just really in-depth about commodities. Great show. Just check it out. There's plenty of time. You can get it because it's archived. You can look at it in your own time. Great information. So I had some fabulous questions. One is the XOP. So the XOP is at 33.87, up 85 cents today. It's being repelled by the 9-period moving average. In the Chapman wave, we've made a peak E. The last peak D at 31.68, so a pullback in time, and then boom, it ran to the upside. Peak A, peak B, peak C, D, E, and then at 37.31 on the 27th, that's been a lot of 28th, 37.31, it turns around, and what is it? Of course, I forgot to mention, the XOP is the S&P Oil and Gas Exploration ETF, and it goes from 37.31 to the yesterday's low in the 32 area, and now it's at 33.87. I've got a peak F. I've got the MACD turning down. I've got the stochastic under 80% and 49%. It's actually under 50%. I've got a down arrow, which says the daily has gone to a sell mode. But the weekly is still looking very good. It doesn't say that it can't go to a sell signal, but at this particular point, 32.37 is the 9-period moving average. It almost got there. It hasn't got there. That's going to be key support. The stochastic's at 92%. MACD is good. Is it a short? I don't think it's a short. Well, it would have been a short, maybe in the 36s, only because it would have given you a better opportunity to make some real money. But for 1.5 or 2 points, I don't know if it's really worth it right now. There's a trend line and should go into the Chapman wave inside track support level between 31.30 and 32.07. So that's the area that we'll be looking at to see if it can stabilize. If it does break that, then we're looking at that monthly chart with an A that could be a failure, right? So here we go. One more question. Alcoa, aluminum's, what's the question is, copper and aluminum. Are these saying weakness, economic weakness, he means? Well, Alcoa's pulled back sharply from the peak. I've got a down arrow. It's gapped down. It's made an island reversal at 10.10. It looks like it wants to go to 9.83 to 9.19. Spoke about that yesterday with Scott. And the weekly chart has made a peak. I'm almost certain it's a peak C. And the technicals are still quite good, not quite as good. I'm going to be watching this. I don't want to make a statement yet that this is the end. And high-grade copper right here, HG, failing. It was acting well, and then boom, it just took a plunge. I think that the Fed is going to have a real tough time making a decision to actually raise rates based on their data. We'll see what happens. And you've got the jobs report tomorrow. So I'm going to just do this because we're about to wrap up. I'm going to say a couple of things. One is, I'm going to try to make it as easy as possible. If I'm using, but if you're understanding what I'm talking about in terms of the whippiness, because all the other patterns have been very whippy from the top they made in that almost exact, between 2 days less in about 120 trading days. It missed by maybe 2 days, going from the May high to the November high to the April high. So everything matches right now and says we should be very choppy, lower highs, lower lows. And then my thinking is we're going to have a whopping rally coming up, and that whopping rally is going to be very important. We'll see if, in fact, the whopping rally is something that is sustainable, or whether we're just going to copy this and break down. So with that said, I'm just going to say to this person, hold on, I'll be with you right now. I'm just going to wrap up here. Basil Chapman for Tiger Conditions Hour. I'll be back with Tom O'Brien a little later on. Thanks for being here. And go to the front page of TFNN. Check out my opening call.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.